Sean Haney here with RealAgriculture.com and Real Ag Radio, Rural Radio 147, Sirius XM, that you can hear every weekday at 4:30 Eastern on Rural Radio. Joined right now by Patrick DeHaan. He is head of petroleum analysis with Gas Buddy. Patrick, great to have you back.
Good to be with you again.
Okay, a lot of attention, of course, from the farming community in Canada and the U.S. when it comes to diesel prices. Now, I guess give us your synopsis, the overall arching. What's actually happening here? We have a lot of focus on the OPEC Plus cuts that happened earlier in the spring taking effect. We saw a big price rise through the summer. Things have kind of cooled off a little bit, sort of relatively. What's happening?
Yeah, things have cooled off a bit. Diesel prices have actually inched down a little bit from where we were back in mid-September, when the average price for diesel across Canada hit about $1.88 a liter. We've fallen a little bit, not a whole lot, to $1.81 a liter, but really any decrease in the fall is something to get excited about, because this is not usually the time of year that we see diesel prices inching down. In fact, if we rewind to last year, we were seeing diesel prices explode, especially in eastern Canada. A lot of that had to do with the fact that imports were under a lot of pressure on the eastern Canadian coast because of Europe's need to heat itself last winter. Going into winter, natural gas inventories were extremely tight. Europe was buying a lot of diesel because it was cutting off Russia. In addition, last year saw Chinese coal demand surge, and China, to supplement coal, was buying all sorts of distillate, diesel, and heating oil. And so that caused the price of diesel last year to be much higher. So we're getting a bit of a break this year. Overall, the price of oil has seen some pressure, which has certainly bucked some Americans and Canadians alike, thinking that oil prices and diesel prices could go up because of the situation in the Middle East. But we're getting a little bit of relief as the broader economy slows down. Inflation has still been challenging, and that has continued to induce higher inflation, or higher interest rates, as inflation remains rather high, and that's kept some downward pressure on the price of diesel.
Yeah, last year, Europeans were rewarded by Mother Nature, more warmer than normal winter. Obviously, winter is upon us. Is there still big challenges in that regard in front of us, and challenges for diesel supplies if, say, we're to have a colder than usual winter?
Yeah, Mother Nature is always a big wild card when it comes to the price of diesel, simply because so many areas of northeastern United States and into Canada can use heating oil as well to heat your home. So a big cold spell could certainly spell challenges this year. Diesel and heating oil inventories are still rather tight in the United States. Now, we don't get as great of a view from Canadian data, but U.S. inventories remain rather tight, and that's going to set the tone here. There still could be a big upswing in the price of diesel if Mother Nature doesn't cooperate and throws us some very cold weather. That could mean a jump in the price of diesel as we head into the winter months. So that's certainly something to keep an eye on.
I mentioned OPEC Plus and some of the production cuts earlier this year. What is OPEC Plus up to going forward? What's your crystal ball tell you?
Well, OPEC Plus has put a lot of pressure on oil prices. The Saudis really kicked it off this summer after oil prices were as low as $65 and $70 a barrel. OPEC Plus, really Russia, the part of the plus there, got together with Saudi Arabia. It was really Saudi Arabia that kicked things off by cutting production voluntarily and on its own this summer. And they've extended those cuts now through the end of the year. That's when OPEC's cuts will pick up into 2024. That's been the wild card, something to watch moving forward. Will the Saudis extend those production cuts into the new year, or will they allow them to lapse? Well, I think right now the pressure is going to be on the Saudis to continue those cuts, simply because those cuts have now materialized in the price of oil that's been above $80 a barrel for the last couple of months. And so I would look for OPEC to keep its supply situation rather tight, and that could have an impact on diesel prices moving forward. But if we see any movement on the global economy, that certainly could cause some additional pain points as well, especially if central banks start to ease the financial situation by lowering interest rates, something that they've hinted that they could do at some point in 2024.
And then the thought there is, just for the audience, stronger economy, more demand, pressure on, or not pressure on prices, but strength in prices.
Yeah, that's exactly it. If we start to see a hint at even interest rates coming down, that would likely bolster the stock market, get the market going on the fact that growth could return, and that growth would likely mean a growth in diesel and distillate consumption, as well as jet fuel and gasoline. A stronger economy, one that's growing more, is going to consume more petroleum, and that's the thinking.
when you drive around the countryside, you tend to see pockets regionally where it's like, man, gas is expensive here. I've told a story on the radio where I was in the desert between Palm Springs and Phoenix, and I paid $6.50 a gallon for gasoline. But I was going to pay it because I wasn't going to be stranded somewhere in the desert at a fuel or gas. Is there a lot of regional differences when it comes to diesel prices across the U.S.?
There certainly can be. Some areas of the Midwest right now, the bottom 10% of stations in the US are below the $4 a gallon mark, and the top 10% are still above $6. So that's a pretty hefty, $2.50 to $3 a gallon spread. There's still a spread in Canada as well, but you get into the regulation, the rules, the refining situation, the supply, the demand situation in each one of the US's regions. It's really broken down into 5 different regions, by the way, for the purposes of pricing, and every region can have different fundamentals or different balances. California generally sees the highest prices. Now, California has pushed renewable diesel, and with it, soybean oil, which is much more expensive. And so diesel prices in California have remained very high. In fact, the only state right now where diesel is averaging over $6 a gallon is California. And again, because of the push of renewable fuels, whereas other states like Texas are currently seeing average diesel prices below the $4 a gallon mark. So that's not a huge regional difference, or that's not a huge geographical difference between California and Texas, but between those two states, a difference of almost $3 a gallon for diesel.
Yeah, soybean growers and canola growers across Canada and the U.S. are being told that there's a big future here for renewable diesel. Is what kind of from your I guess vantage point, is it having any impact on the market from a supply standpoint at this point, and how that reflects to pricing?
Well, I think so, but the market is limited still a bit by the difficulty in getting some of that renewable diesel to the market. Keep in mind that refineries need to convert their facilities from producing traditional diesel to biodiesel, and so that process can be time consuming. But a lot of those refineries in California have made that switch to producing biodiesel. And that's primarily why California, I would estimate that at least half of what California is consuming in terms of diesel is now biodiesel. And so where there have been government credits and mandates, it's pushed market share for biodiesel up significantly. But the situation varies from state to state. California has adopted it. Refineries in California have been incentivized to shift their refineries to renewable diesel. We're seeing that as well. Irving Oil, or excuse me, not Irving Oil, but the refinery in Come By Chance was bought by a company for the process of converting that from a traditional refinery to producing more biofuels. And so it is picking up steam. The biodiesel movement is picking up steam in Canada as well. But again, there are some challenges with making those conversions. They are expensive. And getting that to inland Canada could be challenging as well. That is those biofuel products.
Now, as we look ahead to 2024, farmers, ranchers, big consumers of diesel, they're burning diesel every day on the farm or ranch. What are some of the indicators, the things that they should be watching to give them maybe some of those signals on whether or not pre-buy or things like that?
I certainly would be watching Mother Nature, any extended temperatures. I think much of North America is looking for a slight El Nino, which could keep some communities warmer and others colder. So watching those fluctuations, watching those long-term climate predictions for how cold it's going to be could be a big hint into what diesel is going to do. We're also coming out of refinery turnaround season, so there is more capacity to produce more diesel as refineries finish up their fall maintenance. But I'd be also watching the global picture in terms of what's happening in the Middle East. Now, we haven't seen oil prices react yet, but there have been some banging of the drums by countries like Iran, who is a major oil producer. So I'd keep an eye on what's happening in the Middle East. And then back to the drawing board, economics, good old economics. What central banks are doing? Are they going to push the economy back into growth, or are they going to constrain growth to keep inflation in check? I think those are the biggest indicators: the economy, the Middle East, and Mother Nature.
Patrick, thanks a lot for joining us here. Really appreciate it. Keep up the great work at Gas Buddy. We'll talk to you again soon.
Thanks for having me, Sean.